Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello and welcome out. We're going to do an update, and we're also going to do the little guys. So we'll do the update quickly and go through that, and then we'll get to the little guys and look and see what smaller dollar stocks we've got for the next few days that we can trade, the rest of this week and early part of next week. The beauty of the way that I find candidates and the way that I trade is that it doesn't really matter what day of the week you do it. You're going to find candidates anytime. So it was, timing-wise, it made more sense for me a while back to do everything on the weekends. It's just, life changes and things happen, and so shift things around, and it doesn't really matter. I know some people think it's a big deal, and it's really not. And I find candidates any time of the week, so I only look once a week basically. So anyway, that being said, let's start off with a little quote, and I like this one. I think it's been a long time since I've used it here. It is definitely near the top of the favorites, and especially with respect to trading. So there is no greater wealth in this world than peace of mind. And one of the contexts I put this in is looking at probability. And when you start to learn and recognize, and it really sinks in, because that's part of the issue with trading, right, is it doesn't sink in. We know it in our heads, but in order to get that to translate into our hearts and really fully accept it and understand it, it's a big journey. And it can take a lot of time before it finally really sinks in. And one of the things with respect to probability that is so important is understanding that we don't have to be right. Trading isn't about being right or wrong. It's not about picking the right stock, picking the right option, picking the right direction. None of that really matters. It's about finding an opportunity, creating a vision for that opportunity, creating a plan that puts the odds on your side, and then executing the plan. That's what trading's about. But when you finally get to the place where you recognize this and you realize it and it really truly sinks in, all of a sudden you go, wow, this is kind of fun because I'm at peace with trading. I'm just relaxed. You have peace of mind because you know that you only have to be right 23, 25, 27, 28% of the time, and you're still going to come out ahead. And peace of mind is very valuable. It's one of the best things we can have in every area of our life, financially, relationships, with our kids. You have peace of mind knowing that everything's going to be all right. And when it comes to trading, one of the things that few people ever get is that peace of mind. And part of the reason is because they're not using the odds, and they don't recognize that odds is what's important. They don't recognize that if they just implement that simple piece, simple math. I mean, honestly, years ago, I remember there was a little tool that I can't even remember where I found it. Some little guy created it. You downloaded it on the web. You didn't look at a single chart. You didn't look at anything. You literally just ran the numbers. And it was all based on probability. And that's probably where I started to turn and recognize how important probability was. Is that all you did was punch in numbers. And you had a favorable risk-reward ratio. And it would just come out and say, here's the result. Boom. And over a series of multiple trades, you start to see this account grow. Even though you're not looking at a single chart, you're not creating a single vision, you're just simply making decisions based on numbers. There's no technical analysis involved. And the mind-blowing part is that when you do put technical analysis into it, you add that to the equation, and when you get decent or really good at technical analysis, it's just going to improve your results. But you got to remember, you got to stay focused on the fact that it's odds that are the most important. Because even without the charts, you can still do just fine, only with odds. It's mind-boggling to think about. But once you really get there and it really sinks in, you'll get peace of mind. And peace of mind, as this quote says, leads to greater wealth. So let's get to charts. Now this is where it gets interesting. You know, looking through the markets and watching and seeing what they do, I'm seeing something I've never seen. I mean, 15 years into this, it is mind-boggling to see it, and it's hard to figure it out because we got the S&P, right, which basically got bullish on a short-term basis, but we've had a big run to the upside. Would expect some kind of pullback here. You go look at the NASDAQ, same thing, big gap last week. That are all basically from Amazon, Google, and Microsoft. The vast majority of that gap, I'd say at least half, if not 3/4 of that gap was from those three companies. The industrials flattened out over a couple days, right? It was, Thursday, Friday it was up. Then today, Monday, Tuesday, it just sat there. Very little volume, which is a little bit bullish. And here's where it gets interesting. You look at the transports and what they did today. Transport's down 218 points with an increase in volume, albeit not a huge one. But now there's the old Dow theory between the industrials and the transports. If you've been through Patterns in a Flash, you know that there's the two that you look at these two, and when one breaks out and the other one doesn't, it's a red flag. In other words, these two indexes for the most part trade in tandem. Now, it could be argued that that theory doesn't hold true anymore because the Dow Jones Industrial Average is not really industrials anymore. I mean, let's go see. I can't remember, but where is it? It's here somewhere. I'm getting a little sidetracked here, but hey, what fun is it without a squirrel or two, right? But the Dow 30. Okay, and notice here it says the Dow 30. It's still the DJIA, Dow Jones Industrial Index, and it really depends on who's marking it. It happens to be that in the extreme charts it shows Dow Jones Industrial Index is the name at the top, but it does show Dow 30 here. It doesn't reference industrials because you've got Apple, you've got American Express. Okay, those are not exactly industrial companies. Boeing is, Caterpillar is, Cisco's a tech company, Chevron could be considered industrial, DuPont would be. Disney's an entertainment company. They're not industrials. GE's the only living industrial, not living industrial, but it's the only company left from the original Dow 12. There was originally 12 companies in the Dow. GE is the only one that is still existent from the original. Goldman Sachs is a finance company. It's not an industrial. Home Depot, retailer. It's not industrial. IBM, Intel, tech companies. J&J, not really industrial. They are, what are they technically considered? I don't know. Consumer goods or something like that? I don't know. JP Morgan's finance, Coca-Cola, soda company. I mean, I don't know. McDonald's, those are food companies basically. Triple M, maybe considered industrial. Merck, Microsoft, drug company, tech company. Nike, it's a manufacturer. It's a retailer. Nike's a kind of a conglomerate, but it's in the retail space. Pfizer, drug company. Procter & Gamble, drug company. Travelers, I think they're insurance, aren't they? I gotta go look. Yeah, Travelers is an insurance company. United Health, a health company. UTX, it could be considered industrial. Visa, Verizon, Walmart, Exxon. I mean, there's really only a handful of companies in here that are actually industrials. So that begs the question of, does the Dow in the industrials versus the transports, does that theory hold true anymore? And I don't know. I mean, it's a debate that could be had because now the Dow 30 is much broader. It's not necessarily linked as well to the transports because it used to be that all the industrials that got built had to be transported somewhere, and that's part of why the theory exists. Well, you don't necessarily have that with an IBM and an Intel and sure, they have products, but Microsoft's pretty much a service. So I just don't know that it holds true. But the interesting part is, why is it though, regardless of whether these two are linked, why is it that the transports would get trashed? And I don't mean beat up. I mean, look at the industrials. The industrials are at 17.5. A 200, 300 point move, a 218 point move on the industrials is pretty good sized. Transports are only at 8,000. It's less than half the size, yet it moved 218 points. It's an enormous move and an increase in volume. So the question becomes, why is it that the transports, which is composed of transportation companies, it's not industrials, but transports. You got FedEx, UPS, the airlines, the railways. Why would they get beat up so badly? If the economy is chugging along well and everything's going well and internet shopping is getting bigger, which it's been growing pretty substantially, Amazon's now the biggest retailer. And if more and more goods are being shipped, then why would the transports as a sector as a whole be bearish? And when you look at the bigger picture, I mean, you're talking it's been going down for 6 months. And at a fairly steep pace, it's not a slow, steady descent. So why is it that the transports are getting beat up so badly and it's so bearish when the other markets are staying up? And the only thing that makes sense, especially looking through over 600 charts in the last couple days, there's a huge disparity between there's some sectors that are getting just trashed and some sectors that are doing okay and some that are doing very well. A lot of the technology companies seem to be doing well. But there's certain sectors that are going well. Healthcare is doing okay. Oil and gas, coal, getting trashed still getting beat up. Some of them are dropping off even more. It's just very odd to have such a divergence. Then you got the Russell, of course, the same is where it's down as well. And the Russell is the small cap companies. So if the transports and the small cap companies aren't doing well, which according to the charts they're not, because for months they've been in a downtrend, to me that says that the big picture of the economy doesn't look pretty. With the SPX, the Dow, and the NASDAQ, which have a lot of tech companies in it, and a lot of other companies that are doing okay, but you got the Russell and the transports that are not. It just paints a picture of concern. That's all. I think the reality is that the economy is not that strong. I think if anything happens, especially anything major or catastrophic, I think it could tilt. It's a house of cards, in my opinion. I don't know. Just my opinion. I think that a lot of the data we've gotten is skewed at best. I just think there's lots and lots of warning signs. And I know a lot of times I get people saying, oh, you're being a pessimist. No, I'm not. I'm just trying to be real. Because you look back to 07, 08, there were people out there saying that, the economy is getting weak. There's a problem here. There's problems. And people for 6 months, a year, 2 years before that crash talked about it and said, this is what we're going to head for. Here's the problems. And boom, 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 boom. They laid out the case. And you know what? It played out. And how much money could you have made had you taken advantage of that crash, that downward move over 6 months or a year's worth of time and just traded the downtrend? You make a fortune, right? There's no sense in sitting on the sidelines or not taking advantage of it if it's there and you know how. So no, I'm not being a negative Nelly. I'm not being pessimistic. I'm being realistic. And I don't know if it's going to play out that way or not, but it just looks like there are definitely some warning signs. Jump into the VIX real quick. It's just sitting there sideways, no surprise. So let's get to stocks. We'll go through the big guys and look through them briefly. Need to clean that stuff out. I'm getting too many. See what's hitting, what hasn't. There's BIB. Now this is that ProShares. I didn't look at this today. Volume's been very light. Obviously, it probably wouldn't have been a good idea because it moved almost 4 points today. I look at this and go, I wish I would have, but you're also, I haven't looked at the options on this, and this is why a lot of times I don't keep the ETFs on here. because the options a lot of times are traded so thinly that there's a big spread or there's not enough open interest. So, and I said that when we mentioned this the other day, but yeah, I just don't know what was there. So I didn't catch this, but I'm not too worried about it. Cal-Maine Foods, not terribly surprised, but did not materialize the way we were looking for. In fact, it went the opposite. In fact, right now you sit here, look at this, go, why didn't I put puts? I should have bought puts. Should have flipped this over and bought puts. It would have been a huge trade. Well, yeah, woulda, shoulda, coulda. Right. Cameron International is still doing okay. Actually, it's kind of doing what I would like to see it do, which is to stay above that 67 level and dance around there. If it stays above there and bounces around it for another couple days, or if it takes off and runs tomorrow through 68, then I'd be interested. CCL has actually triggered the entry the last couple days. The only thing I look at today, I just go, man, that volume is terrifying. It's less than half of the average volume, which is dropped off compared to the last couple months. So the mere fact that it's gone from 48, 49 up to 54 almost, and then it does it on light volume. So a big run, a continued rally with light volume. It could very well run to the target, but definitely cause for concern. Cigna hasn't played out. Campbell Soup hasn't really. I mean, Monday it bounced a little bit yesterday, and then today it dropped off. So again, light volume. Volume's not very heavy right now, unless things are moving down, and then they seem to be. This is one right here. We've got a little increase in volume today. We're sitting right on the. This is Dollar General. Interestingly enough, and this is the weird thing. See, this is what's so mixed about the markets is that typically, if the economy is weak, these type of companies, dollar stores, Walmarts, do well. There's the other wild card right there is why is it that retailers, why is it Walmart and Target? In fact, I'm curious to see where Target is. Oh, darn it. I need to get here. Let's bounce back up a little bit. But what about Walmart? It's the 800-pound gorilla. It's still dropping. Why is Walmart getting beat up? It's down almost 10 points in the last 2 weeks. That's questionable. Retailers getting beat up. Nordstrom's been getting beat up. Target, Walmart. Those are some big names in different sectors of retail. Walmart, Target are the same, but Nordstrom's getting beat up. Dollar General, for goodness sake, is getting beat up. It's a retailer that typically does well in weak economies. If the other signs are there that transports and little companies aren't doing well, and Dollar General should be doing well, maybe it's just way overbought. So again, it's just one more piece to the puzzle that says, caution, watch out, we're probably headed lower. Maybe not necessarily watch out, because that's a negative perspective, right? But hey, pay attention. Reality is that this thing might go down. It might even crash, and you want to be there. So part of the reason I think we're so back and forth, I know I keep going back to this, but you've got certain sectors that are doing okay. The overall market looks decent, looks stable, because some companies are propping it up and other ones, they're trending lower. So do those companies that are propping it up, once they weaken or soften, is that when the crash happens? It remains to be seen. But Dollar General, we're looking at sitting here. It's tested this area, the $65 area now for the second time. It's testing it, and it looks like it wants to break through. Oops. And that's beautiful. There's some indicators that look even better, that make it look even more bearish. So Eastman Chemical, looking a little bit bullish. The only challenge, and this one I left on the list, earnings. Well, shoot, that's tomorrow. How'd that get there? I thought it was out of. There were 5 or 6 that earnings are on just the next few days, so I kicked them out of the list. But for little guys, that is. Oh, that's why, because this is a couple days. Yeah, this is Eastman. Was not expecting it to play out. I almost forgot I was on the big guys. Earnings is tomorrow. I'm not sure if it's before or after. I'd have to go look it up, but that's a dead trade. I wouldn't trade it. EOG hasn't done what we were looking for. Neither has HCN. HES gone the opposite way. PFG done the opposite. A lot of these have. PSCSRE. Time Warner almost hit it on Monday. And realistically, I mean, you could have pulled the trigger there, even though it's tough to pull the trigger when things are going up on a put trade. It is. Sometimes those make the best trades though too. Is you pull the trigger when it doesn't seem like a good time to do it. Moving on to the little guys, only 9 this week. Again, earnings has put in a damper on things. There's about 4 or 5 or 6 that I like the patterns. I like the way they look, but earnings is in the next 2 or 3 days. So they stayed out. So we'll see what happens with them next week. American Airlines. And this is what's weird. American Airlines is part of the transports. Yet it was flat today, but it's been relatively strong in the last 2 or 3 weeks. So but you see it's right there at a resistance. Generally speaking, I like breakouts. I prefer breakouts. And this one might actually be one to flip over. We'll see what the action looks like in the next few days if it does break out of there. But here's the problem with breaking out of there. This is the thing I don't like. And this is where when you get used to looking at charts, you go, okay, this thing's run a lot in the last 3 weeks. It's 38 to 46. If it breaks out, it's made a 10-point move in 3 to 4 weeks. 10 points on 40, that's 3%. Well, wait, is that right? No. A 10-point move on 48 is 20%, 21, 22%. Is that right? Yeah. So 10% would be 380, so call it $4. Yeah, you look at 25%, 25 to 30%. So if it moves 25 to 30% in a matter of 3-4 weeks, the odds of a run continuing like that are very slim, especially for a company like American Airlines. I mean, it's an airline. They really grow at that pace? I mean, does the stock really have that much further to go? And I think the answer is probably not. So even on a breakout to the upside, I'm not excited about an upside trade on this. The only thing I'm looking for here is a drop-off. That's the only thing that makes sense. Even though I prefer breakouts, there may be an opportunity here, so we'll see. AEO has already broken down. It broke that basically 1490 area, and it's a little bit below the entry point. Looks like 8 pennies. We'll see what happens tomorrow. I mean, if it pops back up a little bit, that'd be good. It all depends on what's going to happen in the next few days. Now, ETE, energy, oil, and gas, and as you can see, it's been absolutely destroyed. Most energy and oil companies have been. This thing was 35. It's down at almost 20 now. So in half. But it's had a big drop over the last 2-3 weeks. Nice little hammer. Decent amount of volume. It does have earnings coming up in a few days. So that is concerning. This is the other thing is you've got the Bollinger Band where it's ticked up, it's bounced off the band, and that is usually a bullish sign. You got Stokes extremely oversold, turning up a little bit. You got MACD looking bearish though still. So some mixed signals. Not terribly excited about ETE, especially a bullish, but I think this might be a good bounce opportunity where it could play up for just a few days, 1.5, 2 points. Take a quick little turn, 2 or 3 days, booming out. One day, hopefully. Fastenal is a little longer term. That is if it plays. Because if the market turns bearish and it heads lower, then this will probably do the same thing. Inverted head and shoulders. Pretty nice looking one, actually. So if it breaks to the upside, which obviously you can see it's a ways away from, but at the same time, this has made some pretty solid moves in one day. So it very well could break through it. The dashed dot there line is a scale in entry point. In other words, the 39.58 is far enough away from the neckline that it presents a lot more risk than I like. So what I love to do when there's a big gap between or a big distance between the entry point and the exit, which means there's a big opportunity to make money, right? You're talking 39.50 to 42.27. So what's that? Oh, it's almost $3. $2.50, $3, $2.75, something like that. So which doesn't sound like much, and it's really not a huge amount. But between that and 38, between the entry point and 38.68, which is 90 cents, there's a point where you can get in with a small position, 39.18. You get in with a small position, and that way if it doesn't break out of that 39.50 area, if it just maybe taps it and rolls over and it stops you out, you don't have a whole lot of risk. 50 cents to be exact. No, wait. Yeah. Yeah, 50 cents. Just making sure my calculator is working right. So you've only got 50 cents of risk. If it continues to run, you add to it at 39.58. Not only have you reduced your risk, but now you've increased your profit opportunity. Because if it does continue to run, you got a small position at 39.18. You have even more profit than you would have originally. So we'll see if the inverted head and shoulders plays out. In fact, the indicators actually look good for it. MACD's crossed up above the zero line. It's rolling up. Everything there looks good. So we'll see what happens with Fastenal. FNFG, First Niagara Financial. Huge harami, huge shooting star type of pattern. It's been dancing around this line here for the last 3-4 weeks and looks like it wants to head lower. And so if it makes a move to the downside, definitely be looking at playing this. Gold Corp. Gold has been, looks like, trying to build a little base. You've got a little double, triple bottom here over a little time. It's rallied up to about where that midpoint is, and it's been dancing there for a couple weeks. Now here's the funny part. We got a bearish engulfing pattern. How did I miss this? 1029. How did I miss that? I don't know. So it's coming out with earnings, which could be a good thing. If there's a big move, okay, maybe we miss it. If not, then the pattern just plays out and we play it. But this was on the radar, I think, last week or the week before. But if it takes off and runs to the upside, then we almost have a pennant flag type of pattern there. So if it takes off and rallies, then I would be perfectly intent getting in there. It's going to depend on what happens with the earnings tomorrow. Not sure if it's before or after. Corning. There you go. This thing was $25 now. It's 18 now. So symmetrical triangle, which very rarely acts as a reversal pattern, but in some cases it can. This is a beautiful symmetrical triangle. I don't know if it's actually going to play out that way, but you've also got a rising three methods, basically a mat hold here, with solid volume on day one and the last day, the fourth day. In this case, we only had 2 small candles in between. Volume getting lighter, and boom, it takes off and rallies today, which is based in earnings. So we have to take that a little more with a grain of salt. Not a ton, but we have to know that news is what drove it. And will the news sustain that kind of run? If it does, and it breaks out to the upside, breaks out of that 1830 area, then decent chance we're getting up to about 1980-20, somewhere in there. 1909 is the spot to watch as well. If it gets there, it gets close, then obviously that's an either scale out point or tighten up the stop point. J.C. Penney, triple top, huge bearish engulfing pattern, and when I say huge, I mean engulfing basically the entire previous 2 months. Which the more days it engulfs, the more bearish it is. This thing engulfed an entire month or two. Not only that, it did it with flair. Had some huge volume. And then yesterday it just danced around, long-legged spinning top. Doji, it could be argued either way. And then today it dropped off. JCPenney's in the retail sector. Nordstrom's been getting beat up. Walmart, the other targets, the ones we've talked about, have gotten beat up. Why would JCPenney not as well? And so it most likely will too. And SFUN. Stufan. Going sideways for the last 3 to 4 weeks. Had a big run, dropped off to the downside, broke back through that support level. Made a new low, a new 3-4 week low, and looks like it wants to go down. Now there's earnings on 11/4, that's next week. Indicators also look bearish. We've got the 200-day moving average that's been supporting, but it broke down today, failed at it. So we'll see what this brings. We'll see what the action brings with this one in the next couple of days. So, and see how it plays out, if at all. But earnings is definitely, 4th is, I think, next Wednesday or Thursday. Next Wednesday. So we have a week basically on this one. It did it here. I mean, it did it in 4 days back here. So it's possible. It may not be likely, but it's possible. So, with that being said, going to call it a night, and hopefully you've had fun. I know we did get off on some squirrels today, but I thought they were kind of fun ones today, actually. Not just random squirrels, they were actually pretty good ones. I mean, sometimes I found some really just basic squirrels, but today wasn't just basic. We found some really good squirrels. Anyway, y'all have a great day, great rest of the week, and we'll see you in the next day or two. Bye-bye.